Hello and welcome everyone. My name is James Baird. I'm the Director of Business Development and Lender Relations for Stewart Title Canada, based out of the Prairies. And today it is my pleasure to have David Kideckel, PhD, MBA, Managing Director, Senior Institutional Equity Research Analyst, Life Sciences from ATB Financial. David, how are you doing today?
I'm good. Thanks so much for having me, James.
No, my pleasure, and thank you for giving us a chance to have and discuss about the cannabis industry. So just wanted to hear your thoughts about what is going on with the industry, have a nice conversation, and hopefully our viewers are going to enjoy this. So let's get into it.
Sure.
Can you go over the development of the cannabis industry in the last few years, what you've seen in the market?
Yeah, sure. Absolutely. I mean, if we go back a couple of years ago to 2018, in October 2018, that's when the Trudeau government became the second government in the world to legalize adult use cannabis. First products available for consumer use, you think about the pre-rolls, flour, even certain oils. And that was a certain part of cannabis legalization. And then beyond that, about a year later, in October 2019, the second phase of cannabis legalization occurred, and the so-called 2.0 market or 2.0 products became legal. So those included beverages, vaporizer pens, edibles, the more sophisticated products, and typically higher margin products became available for sale. If you think about how the industry has evolved, certainly in the Canadian landscape, there's been a lot of hype since the inception and legalization of cannabis. I think a lot of that was overblown, certainly in retrospect. And you look at even some of the more recent results of companies reporting earnings just as recently within the last month or so. And you're seeing a number of companies have what's called write-downs of product, meaning there wasn't enough product to actually sell through to the end user. And that's not necessarily because it was bad product. It just, we think a big part of our thesis is that these 2.0 products in the marketplace, they're typically new for consumers. I don't know about yourself, James, but having a beverage or edibles, most users have not experienced this type of product. And typically what users need to do, they need to educate themselves what these products are, what the dosing requirements or obligations are. What effect does branding have? And because of the COVID impact that has had on cannabis and a number of the retailers or dispensaries being ultimately shut down, consumers have had to resort, for the most part, to online retail. And they haven't been able to get that true cannabis experience by going into a retailer or a dispensary. So if I had to, rewind the clock and look backwards, certainly cannabis, there's never a dull moment, even today. I mean, you never know what you're waking up to with industry news, companies acquiring other companies, new products available for sale. Certainly, it keeps us very busy. At the same time, I think there was a little bit of overambition on the part of some of these Canadian licensed producers in the very initial parts of cannabis legalization, where a lot of folks turned Canadian cannabis legalization and looked at it becoming a very global phenomenon. And to some extent, it is a global phenomenon. You see different states in the US legalizing cannabis, but certainly nothing at the federal level just yet. So as a result, many, in particular the Canadian companies, not so much the United States multi-state operators, but they've had to historically purchase additional assets in other parts of the world, which now, if you look back in retrospect over the last couple of years, to some extent has been a total disaster for shareholders because these assets have been written down in some instances.
Very, very interesting. I appreciate that, David. So from 2020 and now we're halfway through 2021, what are you seeing in terms of market growth? I imagine there's been some consolidation, and what are you looking at investments here in the last year?
Yeah, sure. So we're still very bullish on the Canadian cannabis sector. We're still, James, in the very early innings of really a new phenomenon here with cannabis, both in Canada and a global level. That said, if you look at what 2020 total sales were, there were about 2.6 billion in Canadian recreational sales. That's up over 120% from 2019. And these numbers are only increasing. In fact, according to our market forecasts, by 2025, you're looking at a Canadian industry worth around $9 billion, which isn't, it's not something to sneeze at. With that said, there's been a lot of industry consolidation across the sector. Just as recently as a few days ago, you saw almost $1 billion acquisition by Hexo that purchased a private company called ReadyCan. Some of the more, I would say, major investments and consolidators in the whole industry to date, there's been one that particularly stands out that really has nothing to do with Canadian cannabis at all. But GW Pharmaceuticals, we were the only firm in Canada to cover this industry-leading name in more cannabinoid-derived pharmaceuticals. So think of a pharmaceutical or biotechnology company pursuing clinical trials with cannabidiol or CBD. This was widely considered the industry leader. And just back in February, this company was outright acquired for about $9 billion by another NASDAQ-listed company called Jazz Pharmaceuticals. There's been other notable consolidators in the space. You look at the merger of Aphria and Tilray, which now goes under the ticker Tilray. And so we don't think consolidation is done yet. In fact, we think we're just getting started. And when you're looking at some of the key traits, I think that some of the larger LPs might be looking at, you might want to think about the premium segment of flower. And these are typically products with THC of upwards of 20%. And the most recent acquisition in that sector was Canopy purchasing Supreme Cannabis. So we think there's still a lot of room, not only for growth, but consolidation. But we also we take a very critical eye to the multiples that any of these companies are paying for any given company. And in some cases, they've overpaid. But just to kind of backtrack a sec for you, James, I think the first investment, I would say, it wouldn't be a consolidation, but the first investment in the whole industry, this goes back several years ago, an alcohol or beverage company came in and make a significant equity stake into Canopy Growth. That, I would say, changed the industry fundamentally. And it really gave the industry a lot of credibility to say, hey, we got a major beverage player here coming in. They're playing with Canopy. They haven't done too much, to our knowledge, with really innovating product. They're certainly on the right track, especially with beverages. But all this to say that whenever you see an equity investment or partnership in the space, these will take months, if not years, to further develop and realize true opportunity that's at play. Organogram's another good example, another name I cover. About a month or two ago, they just announced another significant equity investment by BAT, or the British American Tobacco Company, multi-billion-dollar company. And again, part of that thesis is to leverage Organogram's innovation and their science into new products that will be ultimately put into the marketplace. But again, you're looking at this taking a number of months, if not years, to fully appreciate the value that this will bring to shareholders.
Thank you very much. I appreciate that, David. Moving on to more of a risk aspect and more on the lending side. As a title insurer, of course, before we insure any of these transactions, we have requirements that need to be fulfilled, such as confirmation of licensing, underwriting issues, and such. Each of these transactions are reviewed on its own merit. What type of lending or underwriting issues do you see from the lending side of the industry?
Sure. So I think, as we were speaking before, James, so I can certainly try my best to tackle the underwriting issue with the full disclosure. That's something that I, as a research analyst, wouldn't be involved with. But I think the same explanation could be given at a high level. I think, as we talked about a few seconds ago, there's been significant oversupply in all of Canadian cannabis, with certain Canadian licensed producers having to write down product. For lenders coming in and underwriting assets, what that means is typically the physical asset available are the cultivation facilities. And the problem with underwriting or lending to, say, a cultivator is that there's just too much supply even today in the marketplace. So while an asset might have been purchased at a pretty good premium in the early days of cannabis, that same asset, even though it's pumping out the same amount of cannabis and could be very technologically advanced, there might actually be no need or very little need for a lot of that product hitting Canadian shelves. So if I was a lender or an underwriter, I would be carefully looking at these cultivation facilities and trying my best to match them against today what industry supply is, and trying to forward think to what that supply could look like several months down the road. And we've seen a number of lenders having to renegotiate aspects of contracts just because certain cultivation facilities have failed to meet their revenue milestones.
Yeah, no, that's good to understand. Anything on the regulatory matters or anything on that side consider?
Sure. I mean, I think as innovative as Canada has been with legalizing cannabis, I think one of the big shortfalls of the Canadian government has been the actual the marketing, significant marketing restrictions that any cannabis company faces, whether that be advertising or the number of or the quantity of cannabis that can be ultimately sold. This has been a bit of a short sight, in our opinion, where if you look, say, to alcohol or even tobacco to some extent, you look at different brands being created. Certainly, many consumers become loyal to a specific brand, especially in the alcohol segment. With cannabis, not to say that consumers can't be loyal to a specific brand, but with the regulatory and marketing restrictions imposed upon any given cannabis company, it's very hard to, because if you walk into a dispensary, you'll see any given product, whether especially in the flower category, it'll be for the most part either a big white or a small white container, which, if for you and me, it doesn't really please the eyes so much, which in some aspects could be positive, because then a consumer isn't necessarily persuaded by what the marketing opportunities are there, but it becomes really a question of actual product that the consumer prefers. But that said, we are hopeful that over time, the regulatory aspects of marketing in particular will be eased. And you look south to our neighbors in the US, again, even state by state, but you walk into many of these dispensaries and the marketing is just very different and more appealing for a consumer good product.
Good to understand. Thank you so much. I appreciate that, David. So we're halfway through 2021. What is the outlook for the rest of the year and beyond? And are you seeing any large developments on constructing new facilities, expanding those, or what is going on?
Sure. Thanks for the question, James. So I think, first of all, our run rate projection for 2021 is 4.7 billion Canadian dollars. Again, a healthy growth from last year as well, right? Like over double. By 2025, we expect that number to hit 9 billion. Obviously, those numbers will be tweaked once we have more accurate data and COVID is behind us. So I think there's a very healthy run rate here in Canada. I think as the market further develops and the so-called 2.0 products gain more traction in the Canadian space, the margins for the producers and the sellers ultimately will increase. As far as any sort of cultivators out there, this is likely an area that, again, back to our earlier comments on this, I think Canada does not need more cultivation. You see a lot of folks in the space trying to be what's called asset light. Several of the Canadian licensed producers have told me they're really only in the cultivation component right now because they have to be. And to some extent, it allows them more control over their product development. But that said, you have a lot of outdoor grows occurring as we speak. And similar, if not identical, products can also be created from the outdoor grows, which come with a significant cost advantage. So when it comes to the cultivators in particular, it's not something at all that I get excited about. What we really get excited about at ATB Research is more on the branding opportunity, the science and R&D for sure, and how different products can be made and ultimately create new products for the Canadian consumer that will gain a lot of traction. And maybe I can just talk about beverages for a second. Beverages is a very interesting segment for us, and I think a lot of the market, because if you look to our neighbors in the US, beverages have just dismal results over the last several years. And that's in large part due to just a lack of quality, a lack of science behind many of these products, and the taste is quite awful with a lot of these beverages. If you look to Canada, this is in very much a discrepant viewpoint. You look at Hexo, for example, with their joint venture with Molson Coors called Truss. They're leading the industry in beverages now. Small component of the overall industry, but they're still leading. We think they have room for growth. And Valens as well has beverage products that we think will eventually do well in the marketplace. But I bring this up because the Canadians, some of the Canadians, at least that we follow, they have superior R&D technology, texture, and taste with the beverages that I think outdo the US. So while it is true, we look to the US a lot for different metrics for what growth can look like. Beverages is a segment where we think it could represent a brand new segment altogether in Canada without really giving any credit at all to our US neighbors.
So David, based on our conversation just before recording, you were talking about biosynthesis and new technologies happening in the market. Can you let us know a little bit about that?
Yeah, thanks for the question, James. So I think what's really important, especially as we're talking about cultivation facilities, you think when cannabis is in its nascent part of the industry, what's even more nascent is the field of the biosynthetic creation of cannabinoids. When folks think of cannabis, they typically think of THC and CBD. But in fact, there's over 100 different cannabinoids in the plant, most of which are called rare or minor cannabinoids. The cost to extract these cannabinoids from the plant is too cost prohibitive for any cannabis LP, licensed producer, to extract. So the new and very exciting area that's near and dear to our hearts is called biosynthesis. And the beauty of this is here, you'll get better consistency, better quality, and then the extraction of very rare cannabinoids at a fraction of the cost what it would produce or what it would cost to produce from the plant. And we think this is going to be an explosive area of growth, especially for the consumer packaged goods sector, as well as the pharmaceutical sector. Just by our market projections, we have this pegged at about $4 billion alone in the consumer packaged goods sector. This is global now, not Canada. In 2025, and about $20 billion in the same sector by 2035. And you look to the pharmaceutical industry, we've done a market analysis, and we think this could be worth, if not more, about $35 billion by 2035. So there's going to be a lot more to talk about, James, on this area, and it's our pleasure to talk more when the market. So thanks.
Yeah, no, very, very interesting, David. So where does Canada sit right now on that side of the cannabinoid and R&D side?
So for biosynthesis, Canada is actually at the forefront of it. I would say the majority of the companies are either in Canada or the US. There's probably a bigger handful of companies in the US. Most of them are all private companies, so you probably wouldn't even see them. You certainly wouldn't see them in the markets because they're not publicly traded. But there's certain companies that even have partnerships with these companies. Organogram has a partnership. It's a Montreal-based company called Hyacinth Biologicals. Kronos has a partnership with Ginkgo Bioworks. All in the biosynthesis space. So while there are several, and Ginkgo is based out of Boston, Hyacinth out of Montreal. There's a few other companies as well. One called Willow Biosciences, based out of British Columbia. So these so-called biosynthesis companies, we think we're only just at the very beginning of what could be a very interesting sector with a lot of IPOs and/or RTOs.
No, David, really thank you so much about providing all of this information and allowing us to understand a little more about how the industry is working, what new developments, new beverages, new technologies are going on, and understand what's going to happen for the remaining of the year. I really want to thank you so much for taking the time to chat with me and chat with all of our viewers from Stewart Title. Thank you so much, and hopefully we'll see you around when this COVID dies off a little bit and meet you in person.